Good afternoon, everyone. Thank you for joining us today. My name is Yuri Chernyavsky. I'm Senior VAT Associate at Bridge Legal and Finance in Amsterdam. Today, we are going to present the topic of modern EU customs representation and responsibility, VAT and duties implications on importation and exportation. The subtopic for today's webinar is going to be fiscal representation and Article 23 license in the Netherlands as a gateway to the EU market, simplifying possible challenges for non-European companies. Before we go forward with the webinar and the content of our lecture today, I would like to mention briefly about Bridge, just to share the small story with you. Bridge Legal and Finance is based in Amsterdam, headquartered in the Netherlands. We are providing various services, including immigration, corporate, employment law, taxes, of course, payroll, HR and recruitment, and accounting services. I'm working with the tax team, one of the teams which are present today with the Bridge as an organization. And there's a tax team does VAT, transfer pricing, corporate income tax, personal income tax, and any other taxes which you can imagine which can exist in this country, in the Netherlands. Today, I would like to also mention that I'm presenting this with a co-presenter, which is Jordi van Tenenbroek, moderator of this webinar today. Thank you, Jordi, for being with us today. And basically, let's move forward. I would like to mention before we start as well that this webinar is recorded. So once we are done today, you will receive the link from our marketing team. So you can share this link with your colleagues who didn't have a chance to participate today, and with anyone who is interested in the subject, in the topic. So don't be scared to share the link afterwards. It's for the public access. No private rights are authorized and secured. Okay, basically, as you could see, the topic is about customs, importer and exporter of record, and fiscal representation in the Netherlands and also in the European Union for non-EU companies, but also for EU companies who are legally based here. I would like to start with a question, and basically with some interaction with you as an audience today. I can set a 30 seconds of your time, so you can answer this question for us. Thank you very much for your responses. I have some responses, majority of responses, yes, that companies use the importer of record and exporter of record. Some of you use sometimes, and some of you, of course, don't use it at all. Okay, and now we start with the main subject of our webinar. Imagine that you have a client or you itself are not European company who is based, let's say, in the United States or Canada or any other non-European country, and would like to expand your business to the European market. You would like to start selling your goods here in the Netherlands or in the rest of European community. And the first subject which you will face when you try to import goods to the European community is the importer of record definition. The importer of record is a definition when someone is responsible for paying duties and taxes, VAT, while importing your goods to the Netherlands or to any other European country. Meaning that this person, this company is going to be responsible for all customs clearance, for documentation, for duties to be paid correctly on time, for VAT, and for the rest of formalities. For the exporter of record, it means that the company who can be based in the European Union or non-European, who is based as a European company or is not based in the European community, this company may act as an exporter of record and to send goods outside the European community. These definitions are just very general for now for this slide. We are going to dive into these definitions on our next slides. So, and quick tips, I would like to ask my audience, I would like to ask you to remember these quick tips, because at the end of this presentation, we will provide some questionnaire. By the way, you can ask all your questions during this presentation, and all answers will be provided at the end of this presentation, first come, first served basis. So please feel free to send your questions, and I will try to cover as much as I can at the end of this webinar. Quick tips again. If you are a non-European company and you are selling under DDP, delivery duty paid, that's the Incoterm used internationally in the trade agreements, meaning that the company who tries to import goods to the European community, to the Netherlands, this company is responsible for the payment of duties, for import duties, for VAT, and for preparation of all formal documentation. And delivery of goods basically in front of the door of your customer. In this case, you have to appoint or you have to act yourself as an importer of record. For the exporter of record, unfortunately, since the recent legislation from 2020, non-European companies cannot act as exporter of record, meaning that non-European companies have to find someone who is legally based in the European community in order to appoint someone to act on their behalf. So the non-European company can be able to export their goods outside to any non-European country. Depending on your situation, Bridge BV will help you to determine the most appropriate setup and deliver the required services. And now we are jumping straight to the point. This presentation, this webinar is divided by 3 subjects. The first subject is the importer of record. We are going to discuss all details relating to this subject. The second chapter is exporter of record. In that one, we are going to share, and I'm going to share and to discuss all details relating and some secrets actually relating to the exporter of record in the Netherlands and in the European community. And the next point would be the fiscal representation, the last point for our discussion today. So as promised, let's start importer of record. As already mentioned, imagine that you are a non-European company and you would like to import some goods in order to expand in the European market. Scenario number 1, you find the customer, you find the client, and you can ask in the contractual, you can make a contractual arrangement with your customer, with your client, that this customer can act as an importer of record for you on your behalf while importing these goods to the European community. It means that you, if you would like to export goods from the United States, Canada, Japan, Singapore, you can deliver these goods to the Dutch border. Your customer is going to act as an importer of record, meaning that the customer is responsible for duties to be paid, for VAT, for all formalities, and all documentation and compliance, VAT compliance, is on your customer. Meaning that you, as a non-European company, are not obliged to register in the European community and to follow any formalities prescribed by regulations. It's quite simple, straightforward model. However, based on our practice, not all clients agree to act as an importer of record, specifically if this customer is not experienced with the import regulations and the customer is comparatively small or medium-sized company who simply doesn't want to import any goods, and specifically speaking, if the goods are arriving to the country where your customer is not established. It can be the case that you find the customer in Italy and you would like to import your goods to the Netherlands through the Dutch border because of simple logistics, comfortable logistics, and you can use a lot of other reasons to import through the Netherlands. However, Italian customer simply doesn't want to act as an importer of record because that jurisdiction is foreign jurisdiction for Italian customer, even though it's Italian registered company would like to purchase goods from you. It can be any other European country. It can be Romania, it can be Poland, any of 27 EU member states. I would like to remind that United Kingdom is not anymore the member of European Community. I would briefly follow on that on our following slides in order to make this picture more clear for you. So, as mentioned, the first case scenario is that if your customer agrees to act on your behalf, on behalf of the non-European company, and to import goods to the Netherlands or to the European Community, mainly your problem is solved. You just need to bring your goods outside to the border of any European country, and your customer is going to take all other to be responsible for all other formalities. But in case if it's not possible, or in case if you simply would like, you don't have any customers yet, and you would like to bring your goods to the European market and to store them at the warehouse, and then in this case you don't have any dedicated importer of record. In this case, you can ask your logistics provider, you can ask the company who is doing logistics services for you, customs clearance broker. It can be any company like DHL, FedEx, any other logistics provider who can import goods on your behalf as an import clearance broker, acting under indirect representation for you as a non-European company. Here we come to the next slide, basically explaining the situation that non-European companies for whom the customer cannot act as an importer of record, those companies have to appoint someone responsible for the importation who can provide indirect representation. In most cases, this someone can be your customs clearance broker. There are two types of customs representation. So in order to make picture absolutely clear, the direct representation and indirect representation. When we talk about direct representation, it's purely reserved for companies who are already established in the European Community. Let's say you decide to open legal entity in Spain or in the Netherlands or in Italy, in any other European country. For these reasons, you can import all goods under your own name. Your customs clearance broker will act under direct representation for you without bearing any responsibility and liability. All duties, VAT, should be paid and reserved simply for the company who is established in the European Community. But what can we do if the company is not established here? If the company would like still to import some goods, to sell them on the European market, but they are not established here. In this case, direct representation is not going to work for this company. In this case, we have to use indirect representation, meaning that those clients who are not established in the European Community, they will be indirectly represented by your customs clearance broker, meaning that responsibility for duties to be paid is shared between the non-European company and the custom clearance broker. That's why representation is called indirect representation. Not many custom clearance brokers would like to follow this model, to be honest. So if you are listening to us today and your customs clearance broker, please pay attention that if you decide to provide indirect representation for the non-European company, you must make clear contractual arrangements with that non-European company for whom you would like to provide indirect representation services. Discuss that one, I would like to move to the exporter of record chapter. That's a second chapter of our webinar today, closely connected, by the way, to the importer of record, because those two concepts are under the same umbrella, but with two different aims, goals. And exporter of record is simply the definition aimed for the companies who would like to export their goods outside the European Union. Community. Sorry. For example, if you are a European company, you're established here, you can act under your own name and to export all goods without any problems and to file all necessary declarations. But in case if you are a non-European company, since recent regulations, you remember I asked you to remember that very first slide with quick tips. Since 2020, you are not allowed to export goods under your own name, even though you are VAT registered here, even though you have an active EORI number here. these registrations do not mean that you as a non-European company have a right to export goods outside the European community. What does it mean when I make a definition between European and non-European company? Quite simple. Non-European company in the European community means a company who does not have a legal presence here, who is not registered with the local chamber of commerce within any European country, who does not file corporate income tax report, and so this non-European company is a company who simply have VAT number, EORI number. They can be fiscally represented by a service provider, but they don't have any substance here. In this case, let's say, for the example, we do have a company coming from the United Kingdom. They obtained Dutch VAT number. They have EORI number. However, they don't have any legal presence here. They don't have employees. They simply have a warehouse from which they would like to export goods outside the European community. Those goods could be produced here, those goods could be bought here, and then to be exported for sales or for any other purposes. However, for this reason, as it's mentioned here on this slide, the company who is not legally based in the European community, they have to appoint a company who is based legally in the European Union and who is ready to act as an exporter of record for the non-European company. For example, it can be the company who can act as your fiscal representative. That can be a company who acts for you as a custom clearance broker. It can be any other European company who is just simply legally based here, or any other, let's say, entity which is just simply based in the European Union. For this one, I have a question for you, which I would like you to answer, since it's quite interesting question for the audience and for the different representatives of various companies. I would start it and give you 30 seconds, please. Okay, good. Most of you answered these questions correctly. Actually, everyone answered this question correctly. And the secret, the trick is that each answer is correct. Any of these entities provided on this slide can act as the exporter of record for your customs operations, meaning that the fiscal representative, European subsidiary, your logistics provider, your customs representative, both of these entities, all of these entities can act as the exporter of record for your customs purposes. And from this one, we are jumping, since we already touched upon the fiscal representation, we are ready to move to the last and to the third chapter and last chapter of our webinar today, which is fiscal representation in the Netherlands. So far we discussed the importer of record. That's the company who is responsible to import goods to the Netherlands. We discussed the exporter of record. That's the company who is responsible for exportation purposes outside the Netherlands or the European community. However, without fiscal representation, without filing your taxes here, not only in the Netherlands, in any of the European community, importer of record, exporter of record does not make any sense, because still you have to be compliant as a non-European company or as a European company. You still have to file your VAT reports, you have to obtain all necessary VAT registrations, EORI numbers, and you need to provide these documentation, these reports to the local tax office. With the example of the Netherlands and Bridge specifically, we do act for non-European companies as a fiscal representative, and we meaning that we do register them for VAT numbers, EORI numbers. We do provide fiscal representation for these companies, and we also provide one unique service, which is going to be reflected on this slide, called Article 23 license, meaning that the companies who are ready to import their goods and to expand their activities on the European market, they can import those goods without payment of any VAT. That's why it's called the VAT deferment scheme, meaning that the company who would like to import goods, they report VAT on the paper. I just explain it from a very simple point of view. So I don't want to go into very deep details. So it's understandable for everyone, for our audience today. Simply speaking, when the company would like to import goods to the European community through the Netherlands, of course, because Article 23 licensing is only the concept which was created in the Netherlands. We do have some comparisons in Belgium, in Spain, in France, in Germany as well. However, I would explain why Article 23 license is more beneficial in comparison with those concepts existing in other European communities. With Article 23 license, you can obtain it within 1 month in the Netherlands, so it's quite comparatively straightforward process. It's quick. All documents you provide to the Dutch tax office are also quite straightforward. You don't need to obtain any additional licenses here as a non-European company. And once you decide to import your goods to the Netherlands through to Port of Rotterdam or to Port of Amsterdam, Schiphol Airport, you simply pay duties on your customs declaration, but you don't pay any VAT. That's a big advantage for your cash flow, because for some companies, specifically for those companies who buy big bulks of goods and they import those goods to the European Union, they have to prepay a lot of VAT as a case. And then this cash flow is a big disadvantage for them, because they have a chance to use this money for some other purposes from a financial point of view. However, now they have to prepay VAT and to claim this VAT back only after a couple of months after the importation. So meaning that Article 23 license is an instrument which gives you immediate right to declare this VAT on the paper, that this VAT is supposed to be paid, but based on the fact that you as a non-European company, you have this right not to pay VAT, you just declare it on the paper. Immediately, I would like to mention that this option is possible not only for non-European companies. EU companies who are based in any other European country or who are based directly in the Netherlands, all of these companies can apply for Article 23 license. The only difference between non-European companies and European companies is the evidence. Evidence in import declarations. In order for the European company, in order to apply for Article 23 license, European company has to provide import declarations based on the fact that there were already imports made to the Netherlands. And based on that evidence, this company can obtain Article 23 license. While non-European company with a fiscal representation, for example, by bridge, can obtain this article immediately without providing any evidence in advance, meaning that you don't need to simply import any goods in advance in order to show that you're active entrepreneur, you're active business who has serious intentions to expand to the European market, if I can explain it in this quite simple language, text language. Also, I would like to mention here that we have one more question for you for the interactions, and I would like my audience to answer that question. Thank you very much. The right answer is only licensed company can act as a fiscal representative for EU and non-EU companies. And I will explain why. Because any EU established company does not have any authorization to act as a fiscal representative, since they don't have specific knowledge for taxes. Imagine if the company who is active in cargo sales, they arrange to be a fiscal representative for another company. And the question is how they are going to file import declarations, how they are going to file VAT declarations, EC sales declarations, intrastat declarations. Those types of declarations may be filed only by the company who is specifically authorized to do it on behalf of the client. And for such purposes, the company has to obtain license for being a fiscal representative in the European in the European community, or specifically in the Netherlands in our case. Any company can, of course, non-European company cannot act as a fiscal representative since it's not even established here. And only if the company acts also as an importer-exporter of record. That's a bit tricky question, because fiscal representative company who is established in the Netherlands, like Bridge, for example, Bridge can act as an importer of record and exporter of record for the company who is not established here in the European community. However, this right is reserved only for specific clients for whom the assessment is made that there are no risk involved, and only in that case, Bridge can act as an importer or exporter of record for such purposes. This should be discussed separately, not for the purposes of this webinar, of course, since it's a bit tricky moment in this case. And now I would like to move also to the next slide, that we have to be careful here with the definitions, because a lot of EU companies, also non-EU companies, they sometimes see these concepts, these definitions written here on this slide. They see it as a one definition, and that's a not correct approach, because confusion shouldn't be created between importer of record, exporter of record, European authorized representative, registered customs representative, and a tax representative. All those definitions are separate from each other, and I will explain them one by one, but just in a very quick manner. Importer of record was already explained to you. That's the company who is responsible for the importation and customs clearance and VAT payment. This company can be non-European company who has indirect representation by customs clearance broker, or it can be your client, as we already discussed. Exporter of record can be only European company if you are acting as a non-European company. So if you would like to export some goods as a non-European company, you have to find someone who is legally established in the European community, and only in this case you can export goods outside the European community. The European authorized representative is exactly this entity which may be appointed for the exporter of record purposes. I know this can be a bit confusing because all these definitions, they are closely connected to each other. But if you, as a non-European company, would like to export some goods, you can find and you can arrange European authorized representative for the exportation purposes. So these two definitions, exporter of record and European authorized representatives, they are closely connected to each other in this case. For example, fiscal representative can act for you as the exporter of record, as it was already mentioned. However, for example, your registered custom representative does not always act for you as the exporter of record. It's not an automatic definition of that. So each company, each function can be, so the conclusion of these 5 definitions is that each function can be played separately. It's not necessary, it's not necessarily important that one company should act for all definitions mentioned on this slide. There are sometimes in practice, in my practice, I can see that for each function, the client may use different company. There is an importer of record for this function, there is an exporter of record for another function, and the European authorized representative is used for the exporter of record, while registered customs representative is not used as an importer of record, but used only for the logistics part, so in order to move these goods physically to the European community. And a tax representative is only responsible for tax purposes, to file VAT, CAT reports, to file EC sales declarations, to file intrastat declarations, and any compliance, tax compliance, which you can imagine, which can exist in the European community or in the Netherlands in this case. So far, so good. We are moving to the last part of this conversation. And I would like to mention that I received a lot of questions from you. So let's see them all. Just a second. Okay, good. The first question is whether indirect representative is also responsible for VAT or only for custom duties liabilities. Very nice question. Thank you very much. In this case, the indirect representative is only responsible for customs duties liabilities. I would explain why. Since May 2023, recent case law coming from Italy, by the way, and this case law came to the European Court of Justice, and European Court of Justice found out that the indirect representative is not responsible for VAT, but indirect representation is only responsible for duties liabilities, meaning that the person, the company who is acting on your behalf and making importation of goods to the European community does not need to pay any VAT in case if the customs office finds that there are wrongly paid amounts of VAT and duties within the period of 3 years from July 2024, by the way, because before July 2024, the statutory period for the audit from customs office is 5 years. Okay, this question was answered. Thank you very much for your attention. The second question coming from our audience is, can fiscal representative act as the importer of record or exporter of record? And this question was already answered. Yes and no. It depends. It all depends on risks, because for some situations risks are so high that the fiscal representation is not suitable for importer of record or exporter of record. For these purposes, it's better to stay apart from importation and exportation and just to provide fiscal services and fiscal solutions for the client, other than just acting as an importer and also exporter for this client. However, based on the various case examples, it's possible that the fiscal representation can also import goods and can also export goods and to provide all necessary documentation. When I am saying exportation and importation, exportation of goods, I don't mean physical movement, because that right is only reserved for logistics providers, for companies with wheels. But from the point of view that all formalities should be followed and paperwork should be done, that's when fiscal representation is quite useful instrument for these purposes. Third question is was also received. Okay, and we have even more questions. So the third question is, what is the statutory period for the revision? Okay, this question was already answered. So for customs audit, meaning that when the company pays duties and imports goods to the European community, for now, the statutory period is 5 years. So meaning that, let's say it's 12th of December 2023, and the company imports goods to the European community. From now, from this day, the customs office has 5 years in order to make a revision how many taxes, duties were paid, and to appeal that decision if something was paid incorrectly or if duties were not paid in the correct amount, I would say. However, I would like to mention that from July 2024, this statutory period is changing, is moving from 5 years to 3 years. So the customs office will have only 3 years period in order to make this revision in the Netherlands at least. The next question is, what are conditions for Article 23 license? Thank you very much for this question. It's a question specifically for Bridge, for us. So the steps are the following. The company should be, if the company is coming from outside the European community, this company should be registered for VAT and EORI numbers in the Netherlands. So simply speaking, if you are non-European company and would like to obtain Article 23 license in order to import goods without payment of any VAT at the Dutch border, you need to obtain VAT number, EORI number. You need to have fiscal representation by Bridge, for example, or in this case, and only after these steps were followed, we can apply on your behalf for the Article 23 license. The reason why you need Bridge and why you need fiscal representation is because of the guarantee. This guarantee is provided to the Dutch tax office that Bridge acts as your fiscal representative, and in this way, there is no chance that the non-European company can escape liability and responsibility from the payment of taxes, correct amount of taxes. So basically, that's how you can obtain if you're a non-European company. However, if you are a European company, in this case, as already mentioned, you need to make two importation of goods to the Netherlands, and then to provide two customs declarations to the Dutch tax office so they can grant you the right to work and to import goods without any payment of VAT. Article 23, I received just a very quick question because this question is connected to this discussion about Article 23 license. There is no expiration date for Article 23 license. So basically speaking that once Article 23 license is obtained, this right will exist forever, unless the company decides to stop its activities here in the Netherlands. If the company decides to stop and for some period of time and then to come back, then the new request should be filed, because in this case, the new procedure just starts again. Another question. Do we need to open a legal entity for the fiscal representation? No. And a sub question to that, why do we need to pay CAT? No, so that's the whole idea of this fiscal representation in the Netherlands. If you, as a non-European company, decide to expand your business to the European community, you don't need to open a legal entity here. You simply register here for VAT, EORI numbers, you obtain fiscal representation by Bridge or any other service provider. I would like let's make it also general that Bridge is acting as a fiscal representative, right? So we do provide these services, but in this case, since fiscal representation is provided, since VAT number and EORI number are obtained, you can act as a business here in the European Union. However, you don't create any substance here, so you don't need to pay CAT. You just need to pay correct amount of VAT if you sell your goods to private consumers, for example, or you need to declare that all VAT and that all goods are sold correctly if you are selling B2B throughout the European community. And I would like to mention that if you're a non-European company, and if you tell us that you're doing only B2B sale of goods, in most cases, it means that no VAT should be paid at all, because all VAT is just reported on the paper. It can be revert charged domestically. It can be revert charged on the European level. However, the very big beneficial advantage of this whole structure, if you're a non-European company doing business in the Netherlands, that you just report all VAT, all taxes just on paper. You don't really make any payments from a cash flow point of view. You report it on the paper, we report it on VAT report, and then we submit it to the Dutch tax office. But that's all what we are obliged to do in the Netherlands. So it's quite attractive jurisdiction for these purposes for non-European companies to expand its business throughout the Netherlands to the rest of the European community, let's say. Another question, quite practical question: do we need to open a Dutch bank account if our company is acting under fiscal representation in the Netherlands? No, Dutch bank account is not necessary to be obtained, specifically if you are doing B2B sale of goods. However, Dutch bank account may be quite useful instrument if you are selling goods to private individuals, because private individuals usually prefer if they have bank account which belongs to one of European country in order to make a payment. However, it's all can be discussed and arranged. It's not something like really mandatory and necessary in order to start doing business B2B or B2C, and this business should be related to the sale of goods. Next question is, can you be our fiscal representative? What can you do for us? Yes, Bridge may become a fiscal representative for all non-European clients, basically, after we complete our KYC check and all compliance is done. Bridge may definitely become the fiscal representative. We will obtain VAT number for you, EORI number. We'll do fiscal representation, and you can obtain Article 23 license, so you can immediately start importing your goods to the Netherlands and then to transfer them to the rest of European countries in order to expand, in order to grow. Besides that, as mentioned, Bridge is not only acting as a fiscal representative, it also provides one-stop shop solution. If you would like to have any immigration services, if you would like to obtain corporate services, you would like to obtain payroll, HR, recruitment, accounting, Bridge is an ideal one-stop shop mechanism, ideal entity in order to cover all those services for you, so you don't need to jump from one supplier to another supplier. You just stay within one company who does all services for you. Another question is, okay, what is the timeline? What is the timeline for the setup of the Article 23 license? Good question. As mentioned, it can be done within 1 month, but the statutory period is 8 weeks. So maximum within 2 months, you can obtain all necessary licenses, you can obtain all necessary registrations here, and we can do it for you. I think since we are running out a little bit of time today, I would like to mention that I received the last question. I'm going to answer that question. And the rest of the questions which were not answered, I will provide this slide for you. So you can send these questions to our general email address, and we will come back to you at our earliest convenience. And the last question as promised. Do you see any problems with Incoterms when acting as EORI in the Netherlands? No. Okay, it's a very interesting question indeed. No, there are no problems for the EORI is the exporter of record in the Netherlands. Basically speaking, that as already mentioned, when we have EORI in the Netherlands, that's the exporter of record definition. And from this moment, Incoterms are applicable, Incoterms are important. However, when we arrange that someone should be responsible for the exportation of these goods from the Netherlands, this automatically becomes applicable that the company should be based in the European Union, in the Netherlands, or in any other European country. And as long as this right is reserved for any company, it means that the company should be liable to export these goods outside the Netherlands, right? So Incoterms should be already agreed in advance with such condition that the company who is exporting these goods is going to make export declaration and to declare this export in the VAT report in the 3A section in the Dutch domestic VAT report on a quarterly basis, for example. So Incoterms are not really decisive point here, as long as it's decided in advance and the company who is established here will act as an exporter of record in order to make direct exportation of these goods outside the European community. I think that this for today we are quite good. I wanted to thank again my team for your time, for specifically Jordi van Tenenbroek for moderation, Dasha Husak for preparation of this webinar. Thank you very much. Again, I would like to say big thank you to our audience for participation today. Based on the results, I can see that around 70 people attended the webinar today. Those questions which were not covered please do send them to the email mentioned here with the details of your company, free of charge. I would come back to those questions which were not answered, just to answer them and to provide you with more information. Again, thank you very much for your time. Bridge can help you with any services you may need in the future if you'd like to expand your business here to the European community. And I wish you a very nice day today. Again, thank you very much. Enjoy your day.